Yeah, thank you folks for joining today, and must read before we start. So we plan to record this video and share this video on YouTube in future. So if anyone has any concern about expose their alias, profile, photos, or etc., please do not attend this live session. They can watch the video afterwards. Okay, then while we are waiting for more folks to join, I have a scenario here. So I very briefly to explain. So one of our good friend Molly recommended two stocks to us. Molly is very confident about these two stocks. The first one is the big gap. It's the name called toobigtofail.com, symbol TBTF. The current stock price is $100 per share. The second one is a startup. It calls tomorrowsuperstar.com. It's a stock symbol TMSS. Current price is $10 per share. So before Molly told us, he already bought the big one at $91, the Tomorrow Superstar at $8. So Molly has already all in on these two stocks. 50% of her portfolio value on each stock. So all our friends got the information, and by chance, all the friend has 200,000 portfolio value, and all of us has 70% portfolio value in stock, 25 in cash. So there are typically a few responses. Some friend will buying with 25% cash. Some friends will sold out their current stock and they trust Molly so much, so they all in for these two stocks. Some of them just wait because Molly bought the stock at a discounted price, so they want to get the stock at the Molly's price or even lower. And some of them just ignore it. So what is your thought in this scenario? And do you plan to buy? If you want to buy, how much you're gonna buy? Okay, then this is again based on assumption you have 200 you have 200K in your portfolio, 70% like a 150K in stock already, 25% which is 50K in cash. So what's your decision? No need to answer now. We will revisit this question during our speech. So I want to make it more interactive. Cool. Then we will minimize this guy. Here. Okay. Let's talk about our topic. So this, I promise it won't be boring. It won't be long. I only prepared like 78 lines. So let's go through them. The first questions. So what is the happiness in stock trading? So I got different answers from different friends. So unlike our childhood experience at school, so when we were little in school, we were told you are happy if you score all A's or you get 100 scores in your test. If you are 99 or 95 in our family, you are not that bad. You are not that good. So you shouldn't be happy. You're only happy if you get full scores. Does it still apply? Does it apply to stock trading? No. Nobody can score 100 or all A's in stock trading. Nobody, not possible. In case someone do, it's just 1 day or 2 days. You can never do it all the time. Because if you open your like a stock trading news, financial report, you can see every day they have top market mover. Every day some stocks jump 50, 100%, even 200%. Can you catch all of them? Not possible. So in that means you cannot maximize your investment in stock. You cannot get 100%, 100 score in the stock trading. Therefore, do not chase maximize your gain. That's not possible. So this is not the happiness. Then what is the happiness? I define two things. You should be happy if you can match the S&P 500 performance every year, or you can exceed by some percent. The reason is there are many ETF or stock, bond, or those industry in institutional trade. Not many of them can exceed S&P 500. Not many of them. Those you can check your 401k, those bonds. Most of them are below it. Okay, so if you can match it, or even you can exceed it, you should be happy. The second point, if you have you can have better performance in stock trading than what you have in last year, you should be happy. That means you are improving on average, not just on the one-time case. If you constantly better than last year, you are improving. And I play tennis. So in the tennis world, what do you define winning? Winning is not win or match. Winning is you gain incremental improvement steadily. So if today you play tennis better than last day, you are improving, you are winning. Go on. Okay. Cool. And now we define the happiness. So, but we need to quantify the happiness to make it an achievable annual goal. So how can we do that?
Hey Zhang, real quick.
Yep.
If anybody has questions, is this like an open question, kind of talk?
Oh, yeah, we can have a question session on after each section now. Yeah, we can accept some question now.
Okay. Yeah, just like if people want to like interrupt and interject a question, would that be okay, or do we want to save it for special times?
I plan to ask most of the question at the end, but at each break, like here, we can answer some 1 or 2 questions.
Okay, cool. Just wanted people to know.
Okay.
Thanks.
Cool. Oh, Travis, could you help? I need your help to look at the chat. So in case some important question, sure. You can stop me. Okay.
Yeah.
Thank you. Cool. Now, so let's define our annual goal and break down the annual goal to small tasks which we can achieve it and we can measure it daily. So we define and break down our task by using ANTS. ANTS is the short name for Active Net Gain Trading Style. This is a new trading styles we invent, which will focus on the happiness, safety, and of course profits. So we must call it what it is and what it's not. So ANTS doesn't pursue the maximize of the profit. It doesn't focus on the quick and big money. Say you want to double your money in a week or 2 weeks. Do not use ANTS. It's not for you. It doesn't gamble. It doesn't guarantee to have big profits. You want to double your money in 1 year? No, we don't guarantee it. It doesn't. Nobody can guarantee. But it does help to reduce the risk and reduce the selection range, because too many selection range will increase anxiety. I give example. Say if a stock, one of your stock you owned, it jumped 20% today. Do you want to sell? If you want to sell, how much you are gonna sell? Do you want to keep, let it continue grow? But what if it dropped tomorrow? Will be regret? So all those, because we have too many selections. selections will cause anxiety. And under anxiety, we usually make wrong choice. But with ANTS, it helped. And we will explain how it helped. Okay. ANTS does help reduce the consequence of the wrong move, and it letting profit continue to grow. It will help to prepare for any big rise or sharp drop, and we can maintain a good mood during the high velocity stock market, while Nasdaq can be either up or down 2% or more, just like today. Today, Nasdaq down 2.5% roughly. So are you prepared for it? What's your action today? ANTS doesn't help to pick stock. We pick the stock. But after picking the stock, it does help to perform the daily trade in a pre-planned pattern and with guardrail. So with ANTS, you will not make a big movement which cause your regrets. Okay, we explain this one ANTS. I'm gonna move them to the end to save some space. Oh, okay, what's our annual goal? Let's say our annual goal is make 10% committed gain based on your portfolio value. Let's say you have 200K portfolio value, then your annual goal is to have 20K committed gain, meaning you sell stock and you get real 20K gain. Every year, each year, there are roughly 251 to 252 trading days. It's the 365 minus weekend minus holiday. And then we use 200, the annual goal divided by 250. We get $80 per trade day. So every day we should have a 0.04% of gain, which is also equal to $4 for every 10K per trade a day. It's just elementary school math divide. Good. So this is how we get $4 per day. That's interesting. So for many people I talk to, they think, oh, $4 per day, it's just coffee money. It's too easy to make. That's not a problem. So are you set the goal too low? But if we change the base from 10K to 800K, then the same criteria will tell us you're gonna make $60,666 per month. This per month, and this number can be equal or larger than some people's monthly mortgage number. The people will tell me, oh, are you setting the goal too high? Actually, it's not too high, it's not too low. It's the same rule. It's just different representation based on your portfolio value. Okay. So we can accept some question now, one or two. Okay. If any question, you can either ask me or leave in the chat window. Travis will help to pick up them. Cool. Cool. We have annual goal and we have daily goal. Now, how to complete them? How to achieve them? Okay. Achieve them. Before everything, we define a new concept of trade unit. The trade unit is the amount of money each time when you want to buy a stock, not when you sell stock. When you buy a stock, if you want to buy a stock, you should buy based on one trade unit. Okay, one trade unit. Initial definition is divided by 200. Whatever your portfolio value is, divided by 200. So in our case, 200K portfolio value divided by 200 is 1K per unit. So you every time when you buy a stock, you should only spend $1,000. $1,000. Then every day you can buy up to 5 trade unit. It's not say you can only buy 5, but it's the net buy. For example, today I already buy 5 units. If I want to buy the 6th one, I really want to buy the 6th one, I have to sell 1 unit. Use that money to buy another one. So by doing so, I didn't break the net buy definition. The same situation when we try to do the sell, every day we should not sell have net sell more than 5 units per day. Okay, then every day we must have a sell to achieve the daily goal. It's the $4 per trade day per 100K value. Okay, and then on any particular stock, no matter how you like the stock, we can have maximum 10 units per stock. That's the rule so far. Now, before I take question, we go back to the Molly example. Okay.
And then if I could just fill in a little bit of detail there, that like the reason for the the net buy of 5, the net sale of 5, the max 10 units is the kind of to introduce like the guardrails to reduce mistakes, reduce the chance of like impulse buying or impulse selling or being too heavy in one stock. Yeah, it's kind of recommendations to kind of keep you safe. Yeah.
Yep. Thank you, Travis. So go back to Molly example. Okay. So that's my Excel sheet I use to track all my trading. Let me make it larger. Okay. Okay. So I decide to before that, you know what? I have a secret to share with you guys, because all of us are doing bad things. Good things. So we have a angel friend, which tell us, say, this angel friend is in charge of the price change for these 2 stocks in the next 10 trading days. And the angel tell us how he gonna make it. So yeah, the angel by chance are developer. He just say, for the big stock, the too big to fail, you will choose a random number, and it will do get 2 warm up random number, and finally decide what's the change percentage for that day. And the middle number is 50 because the big stock you want to make an uptrend, so it's whatever random number it will minus 48, so it will favor uptrend. Okay, for the startup stock, yes, it has a big range, big change range, 10 to 90, still random number, 2 times of a warm up. Then it will minus 55, it favors the downtrend, then give us the range. So this whatever angel friend tell us. So what you gonna do? Okay, it's bad.
Zhang, I think we lost you. Oh, I hear you coming back.
Oh, did you hear the angel things?
Yes, yeah, we just lost you for like 10 seconds.
10 seconds. Okay, so actually to us, I don't even care about which friend tell me. I just buy it. with ANTS, we can just buy it because we like Molly so much. So I use my personal account, just too big to fail. I bought 10 shares because it's 1000. Let me make it a bit smaller. Okay. Then the second stock is a tomorrow superstar. I just buy it. I like Molly so much. I don't even care about the price. Okay, we already bought it. Say tomorrow. What happened tomorrow? Okay, just a test for the big stock. Just test for the small stock. Okay. Now we go to the real game. Day one. Okay. Okay, for the big stock, it raised up 6%. The price now is 106. For the small startup company, it dropped 16%. Now the price is 684. So what's the price again? Let's put the money here. 106, 8.6. Okay, all the audience, it's time to make your choice based on this price. Okay, you don't have to tell me, use a paper or notepad to record your choice. Let's see what happened. Yeah, let's continue to our samples. Okay. Now, we want to cover what to buy, although ANTS doesn't focus on select the stock for you, but it does provide the suggestion or recommendation for us to pick the stock. So when we choose stock, we want to use ANTS because we want to hold the stock longer. So we prefer the promising stock, which has a middle term or long term good forward looking. Okay, and we want to choose the stock has continuously wave velocity. We don't want to. ANTS doesn't like a stock has a stable performance, like a $10 from day one to day 100. We don't like it. So we can choose prefer a stock with good dividend. We prefer stocks with institutional traders recent buying. We prefer company inside recent buying. And if the stock is mentioned by multiple YouTubers for uptrend, yeah, it's in our consideration. If a stock can help balance our portfolio with diversity into various industry, yeah, it's in our consideration. The last is just because I like it. It doesn't fit any option item above. I just like it. Yeah, you can do it. With ANTS, you can do it. Cool. We want to choose a stock fit as much as your items on the list. If it can match 3 or even 5, yeah, that's the stock we want to buy in. Okay. So we stop what to buy, then what not to buy. Based on my experience for the naked option, so option, when we do option, it's a covered option and then naked option. For naked option, don't buy it. If you don't know what naked option is, good for you. If you heard the name, just avoid it. We are not the expert. So, and for those like a financial product with high contango ratio, do not buy it. High contango ratio in simple term, which means high cost. If you buy a product with high traction or high cost, do not buy it. I give 2 examples. It's Nugget and the dust. Nugget is 2 times of it bet on 2 times on golden miner upwards, and the dust is the exactly reverse. It's 2 times golden miner downwards. So supposedly one of them raise, the other one down. In very short term, in 1 day or 2, yes, it is the case. But in long term, it's not. In long term, both of them will have the value reduced sharply. I quickly give you a sample. Oh my God. Sorry about that. Okay, this is the dust. Dust is bearish on golden miner. You can see over like 10 years, the value dropped from 90K to $20. Okay. Then wait a second. Okay. On the contrary, the nugget is on the bullish on golden miner. You can see over 10 years, yeah, it's the same trend. It dropped, the value dropped from 80K to $45. So these two things, one bet on golden miner up, one bet on golden miner down, but eventually both of them trend to zero price. So this is the high contango case. For those two, do not buy it. It's not good for us. Okay. Now, when we decide when what to buy and how to buy, then when to buy. If you never own a stock you want to buy in, we call initial buy. Initial buy can be done anytime. Just like we buy the pseudo stock, too big to fail, tomorrow superstar, we just buy it whenever Molly told us. Okay. Then subsequent buy. So when we do the next buy, when the stock dropped 3 times off its regular price range. What does that mean? So take Microsoft as an example. If Microsoft stock every day, yeah, up, down like 1%. If one day it raised like a 3% or down 3%, no, down 3%, that's the time we want to consider to do another buy. That's called subsequent buy. It's the first scenario. Then after, say we sell a stock, if the price drop 10% or even more within 5 days after our selling, we consider to buy it back. Then by doing so, we can see when we buy a stock, we only use like 1 trade unit to buy in. So after we buy in, actually we want the stock price to go lower, so we can buy more at a lower price. Okay, so this is very different compared with other like a trader. For regular trade, whenever they buy in, they hope the price raise. If the price down, they're not that happy. For us, use ANTS. Well, I buy in today. Tomorrow is down. Not bad, not bad. I can buy in more with just buy another trade unit. Okay? But with ANTS, we usually maintain 50 to 20% of portfolio value in cash. For me, myself, I portfolio value in stock usually is 80%. If I have more than 80%, that means I need to sell more. If I lower than 80%, I need to buy more. I don't want to keep too many cash, and certainly do not want to have too less cash. Okay. Then people will ask, say if a stock, you have the initial buying, you have a subsequent buying, you keep drop. what will happen? Well, if you keep drop, I keep buying, and when the stock drop to zero, like it's liquid, it cleared, then I lost. Yes, I lost. In that case, how much I lost? I lost up to 10 trading unit, which is 5% of my portfolio value. It's not that too bad thing. You think about it. If you do not use ANTS, you buy like 20% of your portfolio on one stock in one trade, you lose much more than 5%. Okay, let's go back to Molly's case. Okay, the first day, this guy's raised, this guy's down. What will we do? This one of 6, the other is 8.4. So with ANTS, I have no hesitation to buy more. No hesitation at all. Previous, oh sorry, this is 8.4. I did the wrong tick. This 108. Okay. I want to buy more. I want to buy how much? Roughly $1,000. Okay. But this one I want to sell. How much I sold? We have the definition of our gain, right? So 20K, no, 200K portfolio value. Our daily goal is $80. Can we make $80? No, we cannot make $80. Yeah, probably half of them. Let's see. 6, 6. It's -7. Okay, we sell 7 stock of too big to fail, and we get 42 gains. And we marked when we sell it, when we bought it, and because we like separated them. This is the 3. This is the main. Whenever we sell something, we mark it as green. The related sold stock marked as blue. Is that right? The bookkeeping, right? Yeah, that's right. And we should be able to go to our gain per day page. Let's refresh it. Sorry about that. I forgot to put this one. Okay, this table tells us tomorrow, the next day, we get $42. Okay. And there's a cash flow table which tells us how much cash. So the first day we totally spent $2,000. The next day, because we buy and we sell, we net spend $200 to buy more stuff. Okay. Now, continue the Molly case. After we make the decision the next day. About that. Actually, we should use 106 here. Let's see. This is the price. Now, this is 84. The base price 84. Oh, it changed to 10%. Yeah, up to 10% is 88. Okay, I leave you audience to think about what you will do based on the new price on day 2. Okay. Let's back to our stock. Oh, actually we can do more days. 340. Let's do three more days. Let's have fun. Okay, 110, $8. Let's do. Actually, 8 is a weekend. Let's do 20. 20. Stock. The one is 88. I forgot the other one is. Okay. So this stock I can start to buying now. Let me double check. It's 88, 10%. 10%. Okay. This I'm going to sell it. No? How much we sell? We sell this. I don't know. 50. No, I don't even need it. Okay. This remaining, this 20. This we sold. This the sold. Okay. This is the price. 108. Okay. No. This because I already achieved like a $40 gain today. This price, no, I don't do sell. I don't do operation. It doesn't up too much. It doesn't lower too much. Yeah, I just skip it. Okay. Then on day 3. Day 3. Let's do one more day. Just for fun. The base price is 10 or 24. It dropped to 100. 88. Okay, it dropped up to 50%. Wow. Let's do this one first. 10. Uh, 1035. 110.
And then if it wasn't clear, this is like how Zeng actually does, this is what the trading looks like every day.
Thank you. So, no, here. So this is 100, too big to fail, dropped to $100. It dropped from where? Dropped from 108, right? Okay, 10%. Yeah, we can buy more. We can buy more. Oh, this one. Oh, we should sell more. We plan to sell from this stock. Let's see. Done. Sold. Okay, see, just sell 20 shares. It bring us $39. Okay, I'm good for today. I'm good for the day. So because we sell it, market is green, and this green, and the sold stock. Yeah, clear. Deleted the record because all 120 are sold. Okay, let's go back, refresh. Yeah, 3 days in a row we make around $40, and cash flow daily. Cash flow daily. So far we spent how many days? 2,000. 100. Okay, not bad. Okay, we can continue on and on, but I want to go back to the presentation shortly. You get the idea already.
Yeah, I think it's cool that the price randomly went back to kind of where it started. That like really shows that, you know, you're taking advantage of those little, you know, spikes and dips to, you know, make some profit, even though it stayed the same if you look at it, you know, on the net.
Yeah,
Yeah.
You are right. We seldom in real life see a stock no stop from day one to day end. All the uptrends, very unlikely. More often we see the stock fluctuate up, down, up, down. Yeah, that's where ANTS can take great advantage. Okay, so we talk about the when to buy, and in my example, we somehow covered the when to sell. So mirroring to consequent condition when the stock raised 3 times of the regular stock fluctuation, we can sell. We sell to commit the gain. When a stock accumulate a small gain over time and reach 8% or even more, 10%, 15%, we can consider to sell. Every time we sell it, all the condition we covered here is not saying you should sell. It's we should consider sell them. Not that say you must sell, we consider. So when multiple stock spikes, prioritize selling the repeatedly high velocity stock. When 2 stocks reach the criteria, the one with high velocity is the preferred one. If it's a very plain day and all our stock are underwater with the exception of 1 stock with barely 1 accumulated gain, we can sell it. Even 1% gain, we need to sell it because so that we need to reach or complete our daily gain, which is $4 per 100K per 10K per day. Okay, cool. So when we talk what to sell, what not to sell, we do not automatically sell a stock just because some TV host or YouTuber suggests so. Many YouTubers, they make a bold guess, say bet it's downward. Everybody is shorting that. Well, do not sell because they just say so. Do not sell a stock because it dropped below our stock price. We call it's underwater. We just sell it to avoid a big loss. No, when the stock drop below our purchase price, to me, it's the time to consider buy more. Right? If the buying condition or the consideration is not changed, say is there still institutional buyer keep buying, or the company inside keep buying, well, I don't see a reason to sell it. Okay, cool. Let's do one more Molly days. Then we open for questions. Do we record the price? Okay, great. Oh, whoa, down 10%. Oh no, sorry about that. I used the wrong price. This one minus. Keep using the older price. Okay, it's down to 99. This guy we learned from the practice is 10:35. That's day 4. It's a little bit down. Okay, go to the Excel. Okay, let's decide. This one. Yeah, this is a good price to buy in now. But so this one, it doesn't drop 10%. It not even drop 8%. But we can buy in. If you have a hesitation, you can buy with less than 1 trade unit. And not say you always buy 1 trade unit, you can buy always lower, but not exceed. So in this case, let me do the, hold on a second. This one. This one. $10. This one I don't want to do any operation. This is just $1 difference. Let me double check the price. I think something goes wrong.
It lost 10%, but it was at 100, so I think it should be close to 90.
90? Yeah. Oh yeah, 90. 90. Hmm?
When you did the manual math,
Oh
you
yes,
used the same number again.
Sorry. Right. Thank you for catching it. It's 90. 90. Let's fix the report first. Okay. Yeah, 90. Good price. Good price. No, that's too much. Yeah, sounds good. This 97. No, I don't want to buy it. Not yet. It's just like a 7% something. No,
Now,
I skip it.
Do you have any urge to buy more than 11 shares? It seems like a big discount.
No, that's a good question. Let's keep our principle. It's a trade unit. You can buy always less than a trade unit, but not exceed. You can slightly exceed, but not exceed it that much. No, I don't want to buy it because it can drop 10% today. It can drop 15% tomorrow. If I buy too much today, I will be regretted. See it keep down tomorrow. So whenever I make a purchase, I actually hope it can drop even lower tomorrow. Okay, cool. And every time we do those things, we should refresh the page. See, this page is every gain by day. It reminds us how much money we gain. Oh, today we don't have gain. That's interesting. We need to review it. And the cash flow reminds us how much spend we spend K today. So this one will keep remind us how much cash we left or how much cash we spent, and it reminds us to reserve enough cash to prepare for any sharp drop. Let's see. That's $9. Yeah, we don't have anything to sell to make the gain. Sorry. Yep, we missed the goal for the day. Yep. Yeah, in bad days, especially when you start to use ANTS, it can happen. No, yeah. So the experiment tells us so far that how much money we used, how much money. In general, we spend like the cash flow is 5K, and we can this 5K compare with the 20K portfolio value in total, we can achieve the goal. We can achieve half of the goal. The goal for every day is $80, but we can achieve half of the goal with just a few thousand of money, a few $1,000. So with the rest of money, rest of stock, it's fairly easy to achieve $80 per day. Okay. Back to our things. Yes, we covered what to sell now. Okay. So we defined happiness. We defined the KPI. Then we do how to break down the. We define the annual goal, break down to daily goal, and how to use a daily trader to achieve it. Now we need those dashboard to keep reminding us we are on track. So like all the company in the world, there are three main sheets they use. First one is the balance sheet. Balance sheet tells the company how much asset you have, how much debts you own. So in our case, it's the stock portfolio list. You go to your stock brokerage, it will tell you how many stock you own for each, and for every stock, how many slot you have, what's the price, what's the purchase price and the date. That's provided by the stock portfolio. The second thing is the incoming statement. So how you do the daily operation, how many money the company own gain per week, per month, per quarter. In our case, it's the daily and the monthly sale gain. Let me show it again. That's our daily gain, and we have the monthly gain. Okay, this is our example. So this month we earn $121. Okay, this is the second table. Third one, for each company, they have a cash flow statement. It remind all the CEO, CFOs, hey, is this company short of cash? Do you need to raise more debt or not? So this one equal to our daily and monthly cash balance change list. Again, back to our example is the cash flow daily, and the cash flow monthly. So this one tells us, oh, this month we expend total 3,100. Did I refresh it? Yeah. Use the $3,000 we spend 3,000 cash to purchase stock. By keep reviewing those dashboard, those sheet, it remind us in the right track. It reminds us do not spend too much cash. Say if you have cash flow a couple of days, you keep seeing minus data, meaning you maybe spend too much cash. You need to sell stock to get those cash back to prepare for future. And the gain by days, it reminds us, did you complete the daily goal or not? If you do, okay. So sometimes the stock market goes very well. We start to sell stock, but by reviewing those daily gain, it reminds you not to sell too much, because the stock price can go even higher the day after. With those daily gain, it just like cool down us. Oh, you already eat a lot. You have so much gain today. Maybe it's time to think about tomorrow. Okay. Great. Wow. So it goes quickly than I thought. Now we can open for all the questions. Hello?
I think a couple things that I like about ANTS is the time commitment that you didn't touch on yet. I don't think the time commitment is pretty low. Spending just 30 minutes or less a day is nice, and then just having like a concrete goal, like the whole net gain idea of you have a daily target and you sell stock to reach the daily target, and you have some principles on when to buy and when to sell and stuff. I think it makes it pretty straightforward to even for beginners to kind of get into stock trading and stuff.
Yep. Okay, so we see those pseudo trade in our Molly sample. Pseudo trade, actually it happens daily. I did it every day. So every day I published my trading records. So like today, a Nasdaq dropped by 2.5. That's my daily trade. I sell OXY, sell RAS. That's my daily gain. And my daily gain target is around let me see, around $400. Yeah, now you know my portfolio value. So can I achieve $400 a day per day? Yeah, most likely. And I published my gain summary for last month, November. I make it shorter. That's how much money gain, that's committed gain on those stocks. In total is 21K or 22K. Yeah, I need to pay a lot of tax. So yeah, the URL is in the meeting invite. You can take a look if you have time. And the meeting invites also have Travis and I's LinkedIn link. So there are a couple of posts talking about our trading style and trading records. You can take a look too. Cool. Oh, you guys don't have any questions? That's a surprise. I will have lots of questions if I see those presentations.
I have a quick question. This is Steve. So you said $400 a day is reasonable, right? Or easy to do. What's the capital that you have in order to get 400 per day?
Capital?
How much are you investing?
If you are seeing the shared window, you can see this one. So.
Oh, gotcha. Okay.
I think your total portfolio value, is that what the?
Well, I mean, you don't have to say that if you don't want to, but I was wondering, like, to get these $400 gains per day, what's the capital that you have to invest to do that?
Okay, that's good point. Let me show you. I don't mind to share things. I can only give you the screenshot because the Fidelity website, whenever I launch to it, it display all my account number, the full number. So I don't want to expose that one. That's my screenshot I did this morning. So up to today, it's 923. Today is lower, will be lower because today Nasdaq is down. So yeah, but back to our topic, am I happy or feel better or feel good about today when Nasdaq's down? I feel a little bit good. So when the portfolio value is down, I still can reach my daily gain, $400, and I'm more than $400. So not that bad thing. Okay, this is the up to years 2021 value, and it's kind of show off, but I want you guys to see the power of ANTS. I give you this chart. So this is 2 years chart. Yeah, from January 2nd, lower than 400, now it's 900. So yeah, this account has my stock award, the ESPP, and yeah, but I also take the money away from this account to pay tax. And yeah, so you can see the trend. Okay. Let me see, there's again one more chart. So this fertility website, this 2021, and my Roth IRA brokerage link, blah, blah, blah. Yeah, that's the power of ANTS. Yes, I have many stock underwater, and I'm not worried about it. I probably keep buying more if the stock price going even lower. So, it's almost at the end of 2021. I need to sell some stock which has lost so that I can avoid many tax to IRS, especially this short-term one. Okay, don't be surprised if you see my daily post has some lost starting from next week. Thank you. Yes. I like the question, Steve. Any more questions? Okay. If not, yeah, I will post this one on the YouTube, and feel free to reach us, Travis or me, on LinkedIn or even Teams. LinkedIn is preferred. Just ping us for any questions. Thank you, guys. Have a great evening.
Thank you.